Hello and welcome to Economy and Markets TV. This is the show that takes you around the world of economic and financial news. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent. It is Friday, so it means it's time to recap the news of the week. Normally, I'm joined by Mr. Rodney Johnson, but as you can see, he is not to the side of me today, so he's traveling this week, so I'm flying this ship solo. What we do here is we take the most important news items of the week, break them down, and we try to keep things moving, so we keep each topic to about 2 minutes or less. If Rodney goes over 2 minutes, he hears this sound. I don't think we're going to get that, one, because I don't think I'm going to talk for a topic for more than 2 minutes, and two, it's my bell, so why would I want to do that to myself? So with that, let's get started into the first topic of today, and I've got notes here, so please excuse me if I look down frequently. It was really the news that came out this morning, which was that U.S. consumer prices, or CPI, the CPI index, were up 0.2% in July, up 2.9% for the year. Guys, inflation is here. It's made its way completely into like every aspect of our economy. And the thing that moved this month was shelter. It was up 0.3% for the month, 3.5% for the year. It accounted for about 60% of the move in the index this month. And the way that sort of works is the BLS has a number of categories, a few hundred at least, and they weight them according roughly to how we spend our money. So that puts shelter at about 33%. So in this way, when you get price moves in let's say eggs, the price of eggs doubles. In our budget in total, eggs don't make up a lot of it. So a huge spike and something like that really shouldn't move the needle statistically that much. But shelter is a big thing. And when it does move, it tends to move, it pushes this index around. So it feels like we've got the home prices that we've been talking about on this show, the rising rents have actually finally made their way into these indexes. And like I said, with the weights, that's sort of their way of smoothing things out. They do seasonal adjustments, and so just to kind of take out the volatility. But yeah, it's definitely making its way in. And core CPI, which Rodney likes to make fun of, which strips out volatile food and energy because you still have to pay for those things. So removing them, it doesn't really make all that much sense. But in any case, that was up 2.4% year over year, which is actually the highest it's been since September 2008 on a year over year basis. So in a broad sense, inflation is here. And and even all these numbers this month that we talk about core strips out food and energy, but energy actually fell. So even so with that, we're still up, 3% for the year because of that big move in shelter. Inflation's here. It's made its way into all aspects of the economy, and that could have some implications, with Fed policy and all that moving forward, which we'll get into actually in our next subject, which is consumer credit. It was up only $10.2 billion last month, or rather in June. In May, it popped $24 billion, so they were expecting a pullback from that, but only to about $16 billion, so we definitely missed that. And as Rodney mentioned in the copy this morning, well, we get car loans and student loans. Those things they're in your budget for the month. Those don't change. That's your monthly payment that you make in and out. And so what really typically moves consumer credit is credit cards. That's that revolving thing. So it's an indicator of consumer spending patterns. So if people are feeling confident or if they have the cash, they're going to go put it on credit card, even 0% interest or however you want to do it. When you start paying those down, then it shows maybe the habits of people are changing. We had tax reform, so people are getting more money in their checks, of course, businesses as well. And maybe we saw they didn't go out running buying things. What they did instead was they're paying down debts. And in some cases, even we've seen evidence of this, of putting their money into healthcare. I got a little bump in my paycheck, right? And, I still have this healthcare bill looming, or just to try to make my monthly payment for my insurance premium or whatever comes up in life. So yeah, if this is an indicator of consumer spending, which we know does drive GDP, it makes up about 70% of GDP, that could, have a damper on Q3, which I think Rodney does see coming. Now looking at GDP now, the estimate, it's very early, but it's at 4.3%. This thing typically starts high and trends down. Last quarter was one of the few exceptions where it trended down a bit, but then came back. But the real question is, if we're going to have a slow GDP, and now with what I just said about CPI rising with inflation, we've got slack growth and high prices. What does the Fed do? They've already said they're going to raise 4 times this year, so I don't think they want to take one of those back just for the name of, certainty in the markets and everything. But where does that leave us in 2019? One rate hike? Maybe none? Or if we get something bad in the markets, maybe they lower rates? And that's something that Rodney's made the case for a while, was to keep raising rates up to the point where when you need to slash them, you can. So something to certainly keep an eye on. Our next topic, oil inventory fell 1.4 million barrels, while gasoline, the inventory for gas, rose 2.9 million barrels. So gas refiners are loving this situation. We'll keep this topic quick. We're boosting up shale production again. We're spinning those rigs, which means it's cheaper crude, and these guys are refining this gas as fast as they can. They're running at about over 96 capacity, which is really high. Now, there could be some interruptions in this. We're seeing the situation in Venezuela, which is just horrific. And the sanctions in Iran just started rolling out this week, so we really don't know what's going to happen with that. So temporarily, we got a little dip in price of oil, but it could definitely, if any of these geopolitical situations change, supply shocks, that sort of thing, we could look at the price of oil rising. Last topic I've got for you all today is something I'm sure you guys all heard about, was Tesla CEO Elon Musk, who is a regular topic on this show, suggested on Twitter, it's where we do big business, I guess. Everything important is on Twitter now. He's about taking the company private at about $420 a share, which is roughly, time I was looking, about 20% higher than it's trading now. And he's got funding secured. I might just take this thing private. And, he said he's got the money. He's just sort of thinking about it. People looked into this. Bloomberg ran a story yesterday, I believe, where they surveyed, 15 firms, just trying to get a feel from anybody. And nobody's like, I don't know anything about him having this money. And now the SEC is apparently involved probing this claim. Is it legal to sort of say all this stuff? It's going to be an $82 billion plan. What's going to happen here? Nobody knows. As Rodney said in the copy, Tesla has a lot of debt, and it's got a lot of competition rolling out with other people making all these other companies. We've got Ford, Toyota. Who knows who else is going to try to get into the electric vehicle market? Of course, we have Nissan and Chevrolet. Mercedes is getting into this as well. So how does Tesla as a publicly shared company compete with those big boys? So maybe going private is better, instead of trying to meet these production goals, which Tesla obviously cannot. And now we're seeing some safety issues, which maybe it makes you think they're just trying to push these things out as fast as they can to meet shareholder expectation, because the stock has just been insane, way higher than it should be, right? Maybe just go private. Focus on quality instead of meeting your production goals that you're obviously not meeting. So we'll see what happens with Elon Musk. It's and Tesla. It's just interesting, right? It's just a fun character to watch. I don't own any stock in Tesla, so I don't have a skin in that game. So if you all do, then maybe your situation is different. All right, well, that's all we have for this week. Looking ahead to next week, we've got U.S. retail sales, industrial production, and housing starts. So we're looking forward to those. We'll be covering them. And Rodney will be back. So looking forward to seeing you all next week.